Welcome back to Explain the Charts, your go-to source for in-depth market analysis. Today, we're diving deep into Tesla, a stock that's always a hot topic, especially with major catalysts on the horizon. The market is buzzing with anticipation for Tesla's Q2 2025 earnings report, scheduled for July 23rd, just days away from today, July 21st, 2025. Major financial news outlets like Yahoo Finance and Investors Business Daily are highlighting these upcoming earnings, emphasizing their potential impact on the broader market, which is currently hovering near record highs. However, while some analysts are optimistic about future growth drivers like Robotaxis, publications like The Motley Fool are urging caution, pointing to TSLA's extremely high price-to-earnings ratio of 179 and a recent decline in its core EV business. Despite these fundamental headwinds, which include stiff competition from Chinese rivals and the gradual phase-out of federal EV tax credits, the recent news about robotaxi testing beginning in Austin continues to fuel long-term bullish sentiment. This dichotomy between current financial performance and future potential is precisely what makes Tesla such a captivating stock to analyze, and we'll explore how these narratives align with the price action. Let's begin our journey by examining the broader picture on the daily chart. As we first look at the full daily chart, we can observe a remarkable bullish trend that characterized much of the latter half of 2024. Following a period of consolidation, Tesla initiated a powerful upward move starting in early November 2024, breaking decisively above previous consolidation ranges. This rally saw the stock surge dramatically from the mid-$240s, indicating strong buying pressure and accumulation. The sustained uptrend, marked by consecutive green candles and increasing volume, points to robust investor confidence during this period. This momentum culminated in a significant peak near $480, reaching an intraday high of $488.54 and closing at $479.86 on December 17, 2024. This parabolic rise was undoubtedly fueled by a combination of factors, including positive market sentiment, technological advancements, and perhaps early whispers or growing positive sentiment around the robotaxi narrative, even before formal announcements. This $480 level now stands as a crucial historical resistance point, a ceiling that future bullish pushes will need to breach to signal a renewed long-term uptrend. For long-term investors, this peak serves as a reminder of Tesla's volatile upside potential when major narratives take hold. However, as we transition into early 2025, the narrative takes a sharp turn, revealing a significant correction from those December highs. The stock entered a pronounced downtrend, characterized by a series of lower highs and lower lows throughout January and February. This decline culminated in a particularly large red candle on March 10, 2025, where Tesla experienced a massive 12.03% single-day drop, closing near $222.15 on exceptionally high volume, almost 189 million shares. This sharp sell-off likely reflected the growing concerns about the company's core automotive business, echoing the 21% automotive revenue decline and 70% GAAP EPS tumble reported in Q1. The $220 to $225 zone emerged as a critical short-term support level during this period, demonstrating where buyers were finally willing to step in and halt the immediate downward momentum. This level acted as a strong technical floor, absorbing selling pressure and preventing a deeper plunge, making it an important reference point for future price action. The high volume on this down move confirms significant conviction from sellers. Now, let's zoom into a particularly interesting segment in April 2025, where we witnessed a dramatic bullish reversal that caught many by surprise. On April 9, 2025, Tesla experienced an explosive single-day surge, skyrocketing by an incredible 21.14% and closing at $272.20. This remarkable price action, accompanied by extremely high volume of nearly 220 million shares, directly correlates with news regarding the commencement of Robotaxi service testing in Austin. This event was a powerful reminder of Elon Musk's vision for autonomous vehicles and how the market instantly reacted to tangible progress on this front, overriding recent fundamental concerns. The strong institutional and retail buying on this day was a clear signal that the market is willing to pay a premium for Tesla's long-term disruptive potential, specifically its full self-driving capabilities. For traders, this highlights the importance of staying abreast of major company announcements and understanding their potential to trigger significant, high-volume price movements, often leading to immediate trend reversals or accelerations. This rebound established a new higher low, marking a shift in the short-term trend. Shifting our focus to the more recent period from May through mid-July 2025, we can observe Tesla navigating a phase of elevated volatility within a generally upward-sloping channel. Following the April Robotaxi surge, the stock saw some initial consolidation, followed by a notable pullback on June 5th, where it dropped over 11% to $284.70 on very high volume, likely driven by renewed concerns about demand or broader market shifts. However, the stock found strong support around the $280 to $290 zone, which appears to be a robust area where buyers consistently step in. From late June into July, Tesla has shown resilience, gradually climbing back towards the $330 level, closing at $329.65 on July 18th. This recent strength suggests that while the headwinds of high valuation and increased competition from players like BYD and XPeng persist, the underlying positive narrative around future innovation is providing a solid floor for the stock. The upcoming Q2 earnings call is expected to provide further clarity on production costs and new model development, which could either validate or challenge this recent upward momentum. This period reflects a tug-of-war between fundamental skepticism and speculative growth potential. The gradual rise in volume on upswings indicates a renewed, albeit cautious, accumulation. To gain a clearer perspective on the immediate trends and potential short-term trading opportunities, let's transition to the 1-hour chart, focusing on the last few weeks of trading. Here, we can observe the recent consolidation and the gradual bullish grind that has characterized TSLA's movement into the third week of July. Notice the clear sequence of higher lows and higher highs forming since late June, signaling a steady short-term uptrend. The area around $295 to $300 served as a critical support level for multiple bounces in early July, indicating strong demand at those price points during intraday trading. While the stock has recently pushed past previous hourly resistance levels around $310, it's now testing new, higher resistance as it approaches the $330 mark. Volume analysis on this timeframe also reveals that significant upward moves are often accompanied by larger green candles and increased volume, confirming buying conviction. For the sharpest view of current trading dynamics and potential entry/exit points, let's zoom right into the 15-minute chart, covering July 16th to July 18th, 2025. This granular timeframe reveals how Tesla has been trading within a relatively tight channel, largely oscillating between $318 and $330. On July 16th, we saw a notable surge around midday UTC, with prices climbing from $312 to $317, indicating specific periods of strong buying demand. The most recent significant bullish impulse occurred on July 18th, where the stock jumped from approximately $321 to $330 within a short interval, suggesting heightened pre-earnings optimism or substantial order flow. For intraday traders, the $320 to $322 range is currently acting as a very immediate, dynamic support level where price has bounced off multiple times. Conversely, the $330 to $331 area has formed a clear intraday resistance, representing the immediate ceiling for bullish momentum. The high transaction counts during these moves confirm strong liquidity and active participation, providing crucial signals for short-term trading decisions. Monitoring these microtrends leading into earnings will be vital for anticipating immediate post-announcement moves. Alright, as we wrap up our in-depth analysis on Tesla, let's recap the critical price levels and look ahead. On the upside, immediate resistance is around $330 to $331, aligning with the current trading range highs. A break above this could see a push towards the mid-May peaks in the $350 to $360 range, which acts as a stronger resistance zone. Looking further out, the formidable long-term resistance remains at the December 2024 high of nearly $480. On the downside, immediate support is around $320 to $322, crucial for holding recent gains. Below that, the $280 to $290 zone offers more substantial support based on multiple bounces from earlier in the year. The ultimate strong support, if a deeper correction occurs, would be the March 2025 low near $220 to $225. Our short-term prediction for the upcoming Q2 earnings leans towards increased volatility. A strong beat on FSD or Robotaxi news could propel Tesla past $330 towards $350 to $360, with a 65% likelihood, especially if market sentiment remains broadly positive. However, any disappointment in delivery numbers, profit margins, or a lack of groundbreaking Robotaxi updates could trigger a pullback, retesting $290. With a 35% likelihood given the ongoing valuation concerns and competitive pressures. For long-term investors, the successful commercialization and scaling of Robotaxis and Optimus humanoid robots are the ultimate game changers, potentially pushing Tesla towards or even beyond benchmark's $475 target over the next 12 to 18 months. Keep a close watch on the Q2 earnings call for specific updates on production costs, guidance for the next-gen compact EV, and any new insights into the acceleration of full self-driving adoption. Also, continue to monitor global EV market trends, especially developments regarding pricing strategies and market share battles with Chinese manufacturers like BYD and XPeng, as these will directly impact Tesla's revenue. Remember, the market is dynamic, and while technical levels provide guidance, they are subject to change based on fundamental news. This analysis is for educational purposes only and should not be considered financial advice. Don't forget to hit that like button, subscribe to Explain the Charts for more in-depth market analyses, and ring that notification bell so you don't miss our next video.